Ladies and gentlemen, welcome to Welcome with me, your host, Noble BM. I have a feeling that the market is starting to overheat here. You have been following my weekend edition with our stock portfolio review and the risk assessment for today's week. Now, this is the 3rd of December. It's Tuesday. We're almost at hump day at the middle of the week, and I can kind of see the market to trip around here. So if you take a look at the S&P, actually at the futures, let's go to our Wealth application here. You see MACD, well, not doing well here. Also RSI is at 65. If this reaches 70, that's going to be completely overheated. So I'm not going to talk about a couple of earnings today, but what I wanted to mention is maybe this, for me at least, I'm not a financial advisor. Please don't take advice from YouTubers like me. Always do your own research when buying and selling stocks. But I'm thinking of taking profit this week. Not sure, didn't do it right now or at the moment, but the market is looking a bit overheated. And next week it could be that the market will look a bit different. Let's just say a bit different. We're going to do a risk assessment on the weekend edition once more. We're going to talk about the next week at the weekend edition. So let's also talk about earnings. So today, after the bell, we have Salesforce. If you don't know Salesforce, it provides cloud-based computing solutions. The company offers customer relationship management technologies that brings companies and customers together. So at their last earnings call, they mentioned that they are trying to integrate more and more AI. Now, this company already has a P ratio of 57, and for a growth company, it's a bit overbought, but it's normal. For our days, let's just say a P of 57 is almost normal. Now, they are expecting to release earnings after the bell. They are expecting to have a 9.3 billion revenue and a 2.44 EPS. Now, with a 2.44 earnings per share, now this is quarterly, so you would have to take the entire year, but they did beat each and every one. So they did beat quarter 2 estimates, quarter 1 estimates. So if they're going to beat quarter 3, and we are going to take also quarter 4 into consideration, that they are going to a much higher PE once more. Okay, well, that also depends where the price will land. Currently, they are $328 a share. And if you take a look here at the year-to-date chart, well, they're positive with 24.95%. So if you invested in the 1st of January into Salesforce, you would be up almost 25%. So they're currently down for the week. They had a slight correction of 369. So sometimes I do my little buy 50% before the earnings, then 50% after the earnings if it fails. The last 3 times that I did this, exactly the last 3 times that I did this, it didn't work out that well, and I knew I was making a mistake, but I still did make that mistake. So as always, I wouldn't recommend doing this. But the stock is down, but it must also have a reason why the stock is down. So it's not down for the month, it's not down for the year, but it's down for the week, and they are estimating something. So if this has a large enough pullback, I may be interested in adding to the stock. But for now, Salesforce is for me completely overbought. Let's also check out the stock on Wealth.com. The ticker symbol RM. So CRM, Salesforce, there we go, on the NASDAQ. Okay, so it's on a MACD sell signal. It is also nearing the 50 line. We're still at 57, so I would just wait. Let's see their earnings, and we can make a decision after that. Okay, so the next company that's going to report earnings after the bell is Marvell Technologies. I did a couple of trades on this stock. It almost always ended up being a good trade, but I would be very, very careful with this stock. It is really, really up there. Let's also look at Marvell, because symbol MRVL. Marvell Technologies on the NASDAQ. It has triggered a buy signal. It is on a strong RSI. I would be careful with this stock for now. Now, if they have a good enough pullback, or if they have some kind of a good result, but they still drop, then I may consider adding to this stock. So I'm going to update all of this tomorrow when they actually will release their earnings after the bell, and going to find it on my blog and so forth. So a quick resume of those stocks. Now let's take a look at another stock that's going to report earnings today. That is Pure Storage and also Okta. Both of these stocks are extremely high. Let's take a look at their prices for the year. At least Okta is a bit more realistic, but Pure Storage is up 60%. Now always take a special big care with those stocks. Could have a massive pullback, especially now when distributions are nearing. Please be careful with this stock. So I'm going to report back to tomorrow with those earnings reports. I'm going to have a summary on each of them. You're going to find it. We're going to find it here on YouTube, but we're also and on my podcast. But you're also going to find it as a wrote out version with diagrams, everything that you need on my blog. Now, let's quickly also go over the earnings that we're going to expect for tomorrow. So before the bell, we're going to have Chewy. Then we're going to have Royal Bank of Canada reporting earnings. They're extremely up for the year. They also had a lot of stuff happening in Canada the last year. Then we're going to have Dollar Tree reporting earnings. They're down 42% on the year. And then we're going to have Foot Locker reporting earnings. I will stay away from fashion stocks for now. And then after the bell, I'm going to get into fashion just in a couple of seconds. After the bell, we're going to have Synopsys, then Sentinel-1, and also ChargePoint. Now, later this week on Tuesday, one of the big fashion industry leaders going to report on is Lululemon. We are massively invested in Lululemon. I can hardly wait those earnings reports. I think they beat all year long. Let me just take a look at earnings. So they beat their last report, excepting revenue. But other than that, they beat Q1 2024, Q4 2023, Q3, Q2, Q1, Q4, so far and so on. They have their massive, when did they have their massive drop? Go to Lululemon because that's where we bought them. I think I bought them here. I need to look up my entry price. So we're almost at zero with our stocks, with Lululemon, but we're expecting this. I'm expecting this. There's where profit taking will come into consideration. But also, this is ridiculous almost. Any fashion stock that's up this much, something wrong with it. But Lululemon is a growth stock still. So how much women underwear can you stretchies can you sell? Well, a lot it seems, and they're also diversifying. But who are their competitors? Well, Nike just got their ass kicked, so Nike has fallen behind, and Lululemon obviously took up their market share. Now, another one would be Adidas. Adidas did perform pretty good for the year. Let's take Adidas. Okay, I'm going to take a look at etc. And Adidas, hey, they're pretty much flat for the entire year. Okay, let's say they're up. Percentage are they up for the year? 2-7. Oh, they are up a bit. But nevertheless, after the fiasco they had last year, I'm not going to touch Adidas for a long, long time. Okay, so hope you enjoyed this episode. If you did, give it a thumbs up, share, like, and subscribe. Also, don't forget to check out our Substack and subscribe to our blog. All of the written information is there. And catch you tomorrow. And don't forget the weekend edition. You can check it out right now, where we go over our portfolio, what we bought, what we sold, and why we did it. With this being said, stay safe out there. Remember, none of this is financial advice. Please consult a financial advisor before taking any kind of financial decisions, of course. I'm Norbert BM, wishing you all a safe day. Catch you next time. Bye-bye.